Good afternoon. It's Friday, January 29th. And January has not been a very good market for the bulls, but it's been very good for SMF Pro traders because we are short the S&P 500, and this is a daily chart. Not only are we short the S&P 500, we're also long the VIX calls. There is a series of links and tapes that you can look at throughout the week going back a couple of weeks. From a daily chart pattern, when we got up to 1150, we had a 4 or 5 day topping process. There was no buyers to push the S&P. We started a reversal right here. I'm just showing you the history. 3 days straight down. This was a major support level. What used to be resistance right here, it got up above here. We made the breaks higher, but we broke down below this major support line, and then we had another 1, 2, 3, 4, 5-day top and today's big sell. And the S&P 500 hit a low today of 1071. And basically, we are at a very major crossroad. We have a daily sell signal. If we break below this major support level, we don't have any major support until we get down to around 1035 on the S&P 500, which is this major bottom right over here. What used to be resistance over here back in the early cycle of 817 of 2009. We broke above there on 910 of 2009, and we had a big breakout. We had a sell-off here. We had a big breakout and made highs. But this selling pattern on a daily basis has been a little bit more severe than our normal pullbacks that we've always just had on a daily level here now. Number one, I would like to show you is that the other times we had pullbacks, we had daily buy signals, and this is called moving average convergence divergence. And basically, you pull back with the buy signal, you bounce. This time, we have a daily sell signal on the daily. We are closing below the 100-day simple moving average. All the other moving averages are crossing and going down. You have great trends and bull trends when the moving averages are going up on a daily basis. You don't want to see this here. We are short. We are long the VIX, short the S&P, and basically, I will blow up the chart very quickly here. You can see in depth by looking at the candlesticks here on the daily chart of how bad that selling was on a daily basis. I'm going to show a weekly chart next. This is a daily sell signal. It's the beginning of a bear market reversal. And all of the simple day moving averages are crossing over and going down. This is not good. Somewhere we'll get support, we'll bounce up. The question of it is once we do find that support level, and we don't have any real good support till we get down to the 10, right above the 200, this green line's a 200-day moving average. Still a long ways to go. So we are short put options on the S&P 500. Let me show you the reversal here on a weekly level. This is a double bottom back over here. And I just drew a simple trend line to show you that bottom on 10.4 of 09 and this bottom here on 11.1 were two key areas of where we had that support level. There is another support level right above there, and that's right here at 1050 that I talked about. Look at the weekly moving average. That's a 10-week moving average. We undercut that on heavier volume. We've had a huge double week pullback. We had a weekly reversal right up here. It was confirmed when this happened here. In candlestick charting is that we started up here at a short-term double weekly top, but when that high could not close above the previous week's low, meaning we couldn't get back above there, and the volume selling increased tremendously. Now, your weekly moving average, trends are always strong on bull trends when that 10-week is rising. It's flattening out. We are below the 10 and now the 20-week, and the yellow line is a 100-week, and believe me, the 100-week is descending downward. The longer-term weekly moving average is descending downward. And it has been, even though that we were having this big uptrend here, because of that descending 100-week moving average, that's why this was never going to be sustainable to start with. We've worked an overbought level off here on this MACD. You can see the weekly decline. That's weakness. And basically, I'm not going to go into all of these indicators. We've had a crossover here of the percent DS, which moves faster than the slower stochastic, but both are pointing down. That's why the trend is weak. This is where we started shorting the S&P because we were too overbought to start with. And we have a series of tapes going back to December and November and early January that we were putting in an all-time top, and you know that a 20% correction would really be healthy. So basically there are phases. We are in a bear reversal trend on the S&P 500 on the weekly chart. Join us at www.stockmarketfunding.com. Call us today at 702-685-0772. Get to know us. We're providing you some information. What you need to do is sign up for a free 5-day online trading event where you can watch me live and other people in our pro trading school as to how you can profit. It's all about you making profits on these downside moves now and understanding the weakness in the market. If the indexes are weak, equities are going to be weak.